But you are now on the record, my friend. So like, I mean, yeah. So people want they don't want they want the baby, but they don't want the labor pain, and so they're not willing to like step up and learn this stuff. And it's not their fault. I mean, people aren't geared towards this always.
No, they're not, and then they're not. How can I put it? A lot of the older bars don't even need it, or they don't realize they need it. Put it that way.
Yeah, I mean, I think that there's this like arc of like there's like the first 6 months when you're like cool and people know who you are, and then like there's like the year after that, which is this kind of like middle point where you're not new anymore, but you're still cool, and then it turns into this like, okay, all right, we need to work a little bit harder to get people to come back more because there's 10 new things now.
Yeah. But at the same time, if you look at like smaller markets, right, you have bars that have existed for 25, 30, 40, 50, 100 years that have never spent a penny on advertising because they know, hey, this week I'm going to sell 10 grand.
Yeah, and that's pretty awesome. Okay, yeah. So we're gonna so people are kind of starting to trickle in here. We haven't started yet. If you just got here, this is Bar Teams Live. We're interviewing Chris Schneider about profitable bar economics. We're gonna wait a couple minutes for people to kind of trickle in. There's been 3 or 4 that popped in. Welcome Penny from Ontario, I think it was. We had a nice conversation the other day. So Penny's opening up a bar. I think you guys have spoken, right?
Oh yeah.
Yeah. So Penny's she's down for the hustle. I mean, when we chatted, I was like, there's no sugarcoating this. This is like the hardest business in the universe. She's like, I got it. Okay. So let's see here. All right. So Penny, so you can see us, right? You can hear us. Okay. I just want to make sure that the plumbing is good. Chris, can you see Penny's thing on here?
Yeah.
Okay.
Yeah, we're good.
All right. So Penny, I'm gonna put you on mute so that we can do this stuff, and then we'll get into it in just a second. But all right. So let's go ahead and get started in like actually 1 or 2 more minutes. We'll just kind of wait as people are popping in. There's viewers and then there's participants. So we're going to be talking about profitable bar economics with Chris Schneider. Chris knows what he's talking about. And the reason I know that is because I asked him a very simple question and he answered it in a way that I thought was like actually really, really interesting. And that question was why do you have any business talking about this stuff? Which is my first piece of advice for most people is don't take advice from people who haven't done what they say you should do. It happens all the time.
It does.
Okay. Chris, are you ready?
Yeah, whenever you are, man.
Okay. Welcome to Bar Teams Live, featuring the best and brightest in bar consultants, operators, and brand builders in the game. So today we have author, consultant, podcaster, and seasoned bar operator Chris Schneider talking about profitable bar economics. Chris, the first question I have for you is how do we find you? So in case you're not going to make it to the end of the show, then how do we find you on the internet?
So on the internet, there's 3 really easy ways to find me. For the coaching consulting that I do, barbusinesscoach.com is the website for that. If you want to know more about the podcast, you can find me and talk to me through the podcast website as well. That's barbusinesspodcast.com. And then on Facebook, I have a Facebook group called Bar Business Nation. That is just a place where we're building a community of bar owners that can all interact with each other, ask questions, and really help each other grow.
Great. Okay, so my first question, I'll just dispense with the suspense here. Why are you qualified to talk about profitable bar economics?
Okay, so my background is actually a combination of bar ownership, bar management, hospitality, and bookkeeping. And interestingly, I bought a bar when I was 22. Through the 2010s, owned bars, worked in hospitality for the most part. I ended up getting out of hospitality due to some family medical issues towards the end of 2019, and then fell into actually bookkeeping for QuickBooks. So I'm sure you guys have seen on TV before, they have the advertisements for QuickBooks where you have the bookkeeper that pops up on the screen and does your bookkeeping for you. I actually managed a number of those folks and did a lot of the quality assurance within that product for Intuit. Turns out, though, I really am not a corporate guy, and that owning bars and that kind of freedom that you get from it is something that I wanted. So I made a choice at the end of last year to get out of the corporate tech rat race and to get back into doing my own thing, which has become the bar business coach and doing consulting services. And whether that's on the financial end, menu development, a lot of different things I do for my clients. But that's kind of my background in a nutshell.
Great. Okay, just something I forgot to mention is if you're watching this live, we're recording this on April 1st, April Fool's Day. If you're watching this live, head to live.barteams.com if you want to comment or ask a question, or you can use the Google chat and which is on the bottom right, the little message icon if you have any questions that you want to ask Chris. If it's cool, I would like to ask the first question. Knowing what you know about QuickBooks, would you recommend QuickBooks?
Yes.
Yes is your answer?
Yes is my answer. And that's the short version of the answer is yes, I would recommend using QuickBooks for most cases. Now, the thing is, when you get into financial software, there are a lot of different ones out there, and they have a lot of different capabilities and a lot of different power. So QuickBooks has been around longer than anybody, and it has a lot of power behind it. It can connect with a lot of banks and things. There are some issues potentially with some of those integrations if you don't get them set up properly, but that is a really, really good small business bookkeeping product that tends to be better feature-wise than, say, Wave or Xero or some of their competitors. The other thing, though, that can work really well for restaurants is Restaurant 365. It's all specialized towards restaurants. It does produce generally more detail. It has more reports available in it that are directly impacting bars and restaurants, but it also costs more. So everything when it comes to bookkeeping and kind of just data management in general is going to be a balance between how much time you put in and the level of detail you get. The more time you take, the more detail you get, but at some point you're just wasting your time, if that makes sense.
Well, congratulations, QuickBook, for getting rid of one of those loose ends and cutting you loose there, bud. Hey, all right, that's a little fun little thing. All right, so a question we got from Elizabeth is a big part of QuickBooks is deciding before you set up whether you're going to work on cash or accrual basis. What does that actually mean? I'm sorry, what does that mean?
Okay, so when we're talking cash versus accrual, when it comes to bookkeeping, cash means that you record a transaction when the money changes hands. Accrual is going to mean that you're recording transactions in the future and in the past based upon when they hit. So a fantastic example will be insurance. If we're doing cash-based accounting, when you pay for your insurance, let's say you have a $25,000 liquor and general liability policy, you write one check in February, your insurance cost in February is $25,000. Actually, let's call it 24 because this will make my math easier. On an accrual basis, we would spread that across the entire year. So we would book $2,000 of insurance a month across that year-long period. And you would have to establish a liability, or I'm sorry, an asset of prepaid insurance on your balance sheet to then count the cash against initially when you pay it and to count those individual month payments as you go through. The thing is that generally speaking, accrual accounting in the United States based on taxes is not required unless you have a large company. Most bars, when you turn this over to your CPA, and obviously different CPAs, different EAs, different tax preparers view things differently, but most of these guys are going to file your taxes under a tax basis, which is not really cash or accrual. Most bars and restaurants, you end up somewhere in the modified cash space, which is some hybrid of those two. But generally speaking, cash basis is going to be easiest and it's going to be relatively accurate. And the only thing is you just have to understand that in February, you lost 10 grand because you paid $25,000 in insurance all at once. And then the other months, it'll balance out over the course of a year for sure. But other months might look a little high. Some months might look a little low. And you just kind of have to keep those big purchases in mind as you go through.
Okay. I have to be honest with you. A lot of that didn't make any sense to me, and it's not because you didn't explain it to me like I'm 6 years old. It's because I for a long time, I decided a long time ago that was not what I was going to bang my head against the wall to understand. And then I just hired an accountant and a bookkeeper for my business. So, so my next question for you is, so it's tax time. And so if somebody is listening to this who is working on organizing their finances and getting ready to file by the 15th of April, what advice do you have to them to help them avoid some major pitfalls? And what are the pitfalls, by the way?
So first advice I have, because it's April 1st, file an extension, because your CPA is not going to do it in 14 days. Ain't going to happen. So you need to extend if you still haven't filed your taxes. That's number one. Number two is everyone's tax situation is going to be different. There is no way to say, hey, across this whole industry, here's what's involved. And even when you look at like what type of company you are, whether you're being taxed as a sole proprietor or as an S corp, different elections you can make in the tax code at the federal level, it's going to depend upon your specific situation. So the thing is with small business, generally speaking, these are all pass-throughs. So you're filing your taxes at the personal level, and you need a qualified tax advisor that understands your entire tax picture to really be able to give you good advice. Because if you just have a bar, there may be some things going on that are simple that we could discuss. But if you have a bar, and let's say you have an Airbnb that you're renting out, and anything else going on in your life that's going to complicate that picture, and tax strategy is all dependent upon that individual picture and what it looks like. So generally speaking, there's not much that I can really say with any confidence, because I don't know every individual's whole tax picture. You know, if you're married and your wife has a job and you own a bar and she has a W-2, that's going to change what that looks like versus you're single and you only own a bar.
Right. Well, I'm with Elizabeth on this one. She wrote in the chat again, like, worth every penny to pay a CPA who understands your industry. I'm 100% on that thing. I'm like, and the reason that I know that is because I've gotten crazy letters from the IRS saying you owe us $85,000, and it was actually my CPA who said, my CPA Dan, who's my ride or die, my consigliere. I wrote him into my book. I'm so proud of this guy. And he wrote a letter saying that this is BS. This isn't a valid thing. And then this letter and all the stuff, the interest and penalties that went with it went away. Now that was a unique situation because I didn't know what I was doing, but I have a Dan, right? And so it's like at what point do you decide that I want to be an expert at bookkeeping, the ever-changing dialogue that happens with the IRS, including the increased body count that has happened in the recent years with the IRS? And like when do you say, all right, I'm going to be an expert bookkeeper, or I'm going to be an expert bar operator?
So I think to be an expert bar operator, you have to understand at least the basics of what's going on in your books really well. Because at the end of the day, a P&L and a balance sheet, they are lagging indicators in that you're not getting that data solid until well after the time period that the data is generated in, right? So say, I owned a bar. When I had my bars, it's April 1st. I might not know my March numbers completely for a week or two, depending on when I'm doing my bookkeeping. But you have to know those numbers, because your P&L is, quite frankly, one of the best tools that you have at your disposal to know what's going on in your business and to find problems, right? Because a lot of this comes down to tracking KPIs. So if you think about theoretical food cost, you can pull that off your POS system if you have all your costing data right, versus actual food cost. Your P&L is going to be that guide that shows you where your actual food cost was to compare to your theoretical.
Can you just really quickly, what is a P&L? What is a KPI?
Okay. P&L, profit and loss statement or income statement, right? So it's one of your three major statements that you'll have as a business. You'll have a P&L, you'll have a balance sheet, and you'll have a cash flow statement. P&L shows your profit and loss. It does not, and this is something I always emphasize with people, it does not show your cash flow. That is your cash flow statement. You can, in theory, show a P&L that makes 50 grand, and in actuality, be down 25 grand in cash. And that's not an uncommon thing if you go buy a bunch of assets or if you're paying off a lot of debt or something.
And true or false, cash flow is like oxygen for a business.
True. I mean, if you don't have cash, you can't spend money. If you can't spend money, you can't do business. Right. So you can sustain periods of negative cash flow or low cash flow if you have reserve cash to throw in there. And a lot of times, like the example I was just using with capital expenditures, you go and you buy a bunch of kitchen equipment. Yeah, that's going to hurt your cash flow short term because you spent all this money purchasing an asset. It's not on your P&L, and we can get into asset purchase, but that's a whole different topic. But you need cash in order to operate, right? If you cannot buy your booze, you cannot make a cocktail. If you cannot make a cocktail, you can't make a penny.
Okay, so if I understand correctly, part of your service is that you look at somebody's P&L and you identify problems, right? You can look at, like, you can read their P&L like it's a book and say, like, this is a little bit too much, this is a little bit under.
Yeah.
What are you looking for when you look at those documents?
So when I look at a P&L, I'm essentially looking for do we even have the data on your P&L to actually know where we are? And what I mean by that is a lot of people will get non-hospitality specific bookkeepers and then have them do hospitality bookkeeping. And the problem you run into there is that they don't know how to organize things in a way that's actually going to be meaningful. So for instance, if you just have revenue, right? If you have total sales was $1 million, that tells me nothing. I need to know what were your food sales, what were your beer sales, what were your liquor sales, what were your wine sales. Break that down to a level of data that's actually going to be meaningful. Same with costs. If you just have total purchases or total cost of goods sold, and it's all your inventory across all categories is involved there, well, there's not much you can do with that. So that the first thing I look for is, do we even have a P&L set up that is going to allow us to pull meaningful data from the P&L or from a balance sheet, right? Because there's different charts of accounts, but charts of accounts are essentially the categories on your P&L, the categories on your balance sheet. Do you have the right chart of account set up in order to generate meaningful data? So that's one. Two, it comes down to percentages. So there are some generalized percentages that are industry norms, and they don't necessarily fit everybody. For instance,
can you run us through a couple of examples, like what your labor cost should be, like what your pour cost should be, bar economics, that kind of stuff?
Yeah. So a good example that can be variable on location is occupancy cost. I like to say occupancy cost should be right around 10%. But where I live in the middle of cornfields in Indiana, rent's cheap. Jason, where you live in New York City, rent's expensive. So you'll probably be under 10%. If you're doing a good job in Indiana, you might be over 10% if you're doing a good job in New York.
So what would be included in occupancy costs? Like
occupancy costs, we're looking at cost of the building. So if you're renting, it would be your lease plus your triple net, right? Triple net being your CAM, your insurance, and the property taxes that are getting billed to you, generally as a percentage of the total space that you occupy in whatever building you're renting from. If you own the building, that could be your mortgage, repairs and maintenance on the building, things like of that nature. So occupancy cost 10%, that's one metric I look at. The other big one I always look at is prime cost. So for most industries, what you're going to see is you're going to see revenue. Then under revenue, you're going to see cost of goods sold. And then labor is down in expenses on your P&L. For hospitality, it's really great to take that labor that's down in the general expenses and move it up into the cost of goods sold, because now actually your gross margin, or your what would normally be just your income minus your cost of goods sold, is your gross margin. Here we're taking your income minus your cost of goods sold minus your labor, your direct labor, and we're coming up with your prime cost. So 9 times out of 10, you need a prime cost that's under 55% if you want to be able to profit 15% or more.
Okay. Put it in the chat. Number one, if any of that made sense to you, because I've learned that to be good at what I'm doing right now, like, you have to ask questions like you're really stupid. But in this case, I'm actually I kind of really don't know what I'm talking about. I know I'm not supposed to say the S word in front of my kid. So you said CAM, triple net, and prime cost. So prime cost, you nailed it. You like the explanation. What is triple net? What is CAM?
Okay, so CAM is part of your triple net. Triple net on a lease and this is what you're going to see pretty much anytime you rent. Some people do gross leases, which is just you pay X numbers of dollars per square foot, and that's your total lease. Most lease agreements are going to be the triple net. So you will see your common area maintenance, taxes, and insurance. Those are the expenses the landlord has prorated to the size of your space. So it can get complex when you're talking about leasing spaces, and 27 bucks a foot could actually be 50 bucks a foot once you add in those triple net expenses.
Right. I mean, the point that I keep coming back to is like this stuff. Like I get it, this stuff, but I've only understood this stuff once, and then put it into a spreadsheet formula, so I didn't have to think about it every single time that every time I spent or received a dollar. Do you have walk me through your service? Walk me through what you offer your clients.
So when we're talking about P&L work, like I said, first thing I look for is, do we even have the information that we need? Because not having the information doesn't work. So I like to start, here's where we are now. What can we do with your chart of accounts to improve it and get more meaningful data?
What does that typically mean? Does that mean like reprogramming a POS?
Usually that's just how you enter things in your accounting software.
Right.
So if you're using QuickBooks, it's just creating a different chart of accounts. Now where this can get complex is, say you are also using Toast, and your Toast is integrated with your QuickBooks. It has to be integrated properly, or else you're going to get a lot of crap that doesn't really work. That's not data that you can use to make decisions. The whole point of organizing the P&L in a way that's meaningful is to make data-driven decisions, right? So a good decision, you have data to support it, but to be able to make that good decision, you have to have the data. So that's step one. Step two is then looking at the individual numbers and saying, okay, what seems high compared to industry average? What seems low compared to an industry average? And identifying the reasons why those are the way they are, right? So maybe occupancy percentage is, your occupancy cost is 6%. And the reason is you're in the middle of a cornfield in Nebraska. And just where you are, rent's cheap, property's cheap. So that would be a reason. But everything that's kind of off industry norms, find those percentages. And then it's looking at particularly the percentages that are high and saying, can we pull this down a little bit? What are the barriers that exist based upon just a raw view of the numbers to us in making these numbers better, to improve it? And so you get into a bit of problem solving with that, a bit of root cause analysis. And then it's creating iterative loops of testing different things in order to try to massage those percentages. Because if we can take 1% off your prime cost, we've added 1% to your bottom line. If you do $1 million a year, that's 10 grand. And if we take that, and you own the bar, let's say you own the bar just yourself, we take 1% of your prime cost, we put 1% on the bottom line, we put 10 grand more in your pocket, that's a nice vacation. Right? And that's the way I kind of like to look at all this, because when we're talking small business, we can reinvest, but also it's an impact, a huge impact to you as the owner, and what you can do with your life and how much money you have to spend. So each percentage that we can decrease is a percent more essentially that goes in your pocket, because we're not, as long as we're not hurting the hospitality, as long as everything else stays equal and we're just managing the numbers better, it's straight profit into your pocket when you do something like this.
I mean, this is, as an investor, this is the kind of stuff I would want to see too, whether I was investing for the first time or reinvesting to get some, to recapitalize a bar or for expansion. This is the kind of stuff you want to see. You want to be like, okay, is this bar making money? And if I give them more money, will they make more money? A lot of times they're just a sinkhole because they just accelerate problems rather than organically operational bars. So when you're, tell me about your client. Who's your ideal client? What are your favorite parts about your best clients? What don't you like about some clients?
Well, I tend to work with, I'm in the Midwest, and with the podcast and everything, I tend to get more of a Midwest and Southern US audience. So those tend to be my clients. I like to work with people that have smaller operations. I'm not big on trying to figure out 15 bars. And even folks that have multiple units, because we're looking at P&Ls, because we're talking about numbers that exist in one unit, it's really a one at a time deal. So whether a bar owner has 1 or 5, we still have to attack each bar one at a time, because each bar has different factors that are going to influence the numbers. And it could be as simple as having a guy managing your liquor program that likes to keep inventory on the shelf, right? Because if we have inventory on the shelf, that's money that we don't have in the bank. And if you're not burning it, if you're buying a case of Lillet every 12 months because you use a bottle a month, is the savings from buying that case sufficient to justify tying up all that money for a year? Probably not. So you have to be specific to the individual bar, and I like to work with smaller units. Now, when I say smaller, those bars could be doing $10 million a year, right? They could be giant operations, but I like to look at things on a unit by unit basis, because most of the problems that you can solve are unit by unit problems. Sometimes if you have a bar group, there are some generalized bigger problems you can solve, like why are you spending money on 5 bookkeepers when you have 3 bars? But barring something crazy like that, most times when we're looking to get a percent here and there, it's going to be small tweaks to how individual people and individual units operate that will generate over time really good results for ownership.
Okay. Tell me what you don't like. Tell me what sucks about working with some clients.
Bar owners are freaking stubborn. We're not an industry that is great about adapting and change. And the other thing that's true about our industry is we don't necessarily have owners that are particularly into technology, right? And you start talking bookkeeping, a lot of, especially the older generation of bar owners, I will say, are just, well, I show up, I count my money, I go home, it's worked this way for 30 years, I've made money for 30 years, why would I ever change? And so there's some resistance, I feel like, in our industry overall to technology, to changing the way you do things, that can really be hard to go up against. At the same time, though, if you can increase, if you got a bar that does $1 million a year and you can put 4 more points on the bottom line, that's 40 grand in your pocket. Seems like a good deal to me. Because as much as I would love to charge them 40 grand, I don't.
Okay. Well, I'll let you have that conversation with people individually, but
Right.
let's say that you had 8 hours to work with a bar, and what would be the things that you probably find that can easily save them or make them money, and what would you do to fix those problems?
So the biggest thing is, normally, like I said, with a lot of bars, they're hiring bookkeepers that don't understand the industry. So one of the biggest things for most people is just having the right data, building the right chart of accounts, making sure that they have data that they can use to make decisions. Now, assuming they have that, generally the easiest place to attack is to go after prime cost, right? Can we tweak labor a little bit here and there? Can we tweak cost of goods sold a little bit here and there? And a lot of that comes down to management of waste. Waste is probably our biggest loss of money in the restaurant and bar business. On the food side, it's because everything's perishable. And if you overorder, you're never going to make that money back if the food goes rotten. So waste is the biggest factor that I normally tend to go after. And waste can exist both in spoiled food, but waste can also exist in things like excess labor that you don't need. Waste can exist in managers wasting time on tasks that they don't need to do. Right. So I know, Jason, you and I talked on my podcast a while back about like marketing systems. Well, a marketing system that costs you $500 a month is cheaper than paying a $50 an hour manager to do it for 20 hours. Right. So there are all sorts of efficiencies that can be found. But if I only had 8 hours, my goal would be to make sure they're set up to get the data and at least have the ability then to make the right decisions. The other thing that a short period of time that I would really look at is making sure people have tools to do root cause analysis and have the tools to do proper problem solving. Frequently, when you look at something like root cause analysis, the problem that everyone goes to first is not the real problem, right? They'll say, well, the problem is my bartenders don't make drinks quick enough. Okay, maybe that's the problem, but why don't they make drinks quick enough? Well, because the drinks are too complex. Okay, why are the drinks too complex? Because the guy that made my cocktail list thinks he's a mixologist and went over the top. Okay, cool. So let's make the cocktail list different. You're fixing the problem you're fixing is labor and sales potential, but the actual cause of the problem is your menu's too inefficient, right? Or a lot of times behind bars, it can be as simple as, why are half your ingredients at one end of the bar and half your ingredients at the other end of the bar? Because this bartender just walked 20,000 steps back and forth and added a half a minute to every drink they poured.
Mm-hmm.
And that all can come through in the P&L if you have your P&L set up to show you the right data.
Classic. It's a game of inches.
Mm-hmm.
It's my kids totally making fun of me. So there's a quote in there's a generalized quote in the chat that is like so classic. It's like, we've always done it this way, and that is, I've heard that so many times, and it's like, if you've always done it this way, then why are you on the phone with a consultant? Like, apparently it's not working. Apparently something needs to change.
Yeah, well, and that's the nice thing in our business, right? Normally when people call us, they know they have a problem. On the consulting side of things. But again, a lot of it has to come down to incremental changes, understanding that things can't happen quickly necessarily, and that if you don't change, right? If you do what you've always done, you'll get the results you've always gotten.
Yeah, what got us here won't get us there. Yeah.
Yeah. And I know people that have bars and restaurants that have had them for 30 years, and they know that every week they're going to make 20 grand, and they're perfectly content with that.
Yeah.
And if that's you, great, right? Like, if you don't want to make more money, that's cool. But if you do want to make more money, if you do want to change, then there's opportunities in almost any bar or restaurant to optimize operations and to really push forward something that is going to not hurt your guest experience, potentially make your guest experience even better. Because if we're talking about efficiency and making drinks in order to raise revenue or to lower cost, that's going to make your guest experience better at the end of the day and make you more money.
All right, Chris, thank you so much for your time. What is the quickest and easiest way to find you on the internet and get a hold of you in case somebody needs to work with you?
So quickest and easy ways to get a hold of me is barbusinesscoach.com. or barbusinesspodcast.com. Bar Business Coach is for the consulting. Bar Business Podcast is for the podcasting. Also, I have a Facebook group, Bar Business Nation, that we have a group of bar owners and some consultants and some different folks in there, all kind of helping each other, building a really cool community that's not focused on, there are a lot of them out there focused at bartenders, at cocktails. This one's focused specifically at bar owners. So we can have some conversations that bar owners care about that other people don't necessarily care about, and not catch too much crap for it. The other way to get a hold of me, you can call me on my office phone. It's 812-994-2202. I think it's funny people don't give out their numbers. I give it out all the time. No one ever calls me. So feel free to call me if you want.
Just all right. Just don't take it personally if nobody calls, please.
I won't.
I can't have that on my conscience. Okay. Another thing, just real quickly. You can pick up Chris's book, How to Make Top Shelf Profits in the Bar Business, on Amazon. It's got all five-star ratings. I've read through it. It's like 75 something chapters and it's basically like an operations manual. Like, you can kind of cherry pick what's bothering you at any particular moment. Scan and scroll to the issue that you're having. And then Chris wrote a chapter on it in his book. So highly recommended that you check that out. So this has been a kind of a trial starting episode for Bar Teams Live. We're going to have a lot more of these with the best in the business. And so, Chris, thank you so much for joining us on Bar Teams Live, and we are so excited to have you here. And anything else that you want to say?
No, I just thank you for having me. I really appreciate the opportunity.
course, and to everybody who showed up in the chat, thank you so much for being here. And you will see this again live streamed and who's my rep, and on Bar Teams Live on our free and private platform at barteams.com. All right, thanks y'all. Have a great day. See you soon. And then we cut the feed and end recording.
I think that went really well.